Hi everyone, welcome to another episode of My Blockchain Island. I am here today with Chris, a good
Hello,
friend
Carla.
of mine. Hi, how are you doing?
Good,
Good. It's been a while since we last spoke, right?
indeed.
Where are you?
I'm in Munich right now. I'm flying home.
Flying home, back to the Blockchain Island.
So they say.
Did you miss us?
For sure.
Are you looking at some snow right now?
No, actually, it's a beautiful day here. But
Damn it.
I'm
I
flying
was gonna try and
from
sell you
Norway.
sunshine. Sorry,
Say
Chris?
again?
I was going to try and sell you our sunshine.
No need. But I'm flying from Norway, and there was a lot of snow over there.
Oh, nice, nice, beautiful. All right, Chris, for those of people who maybe didn't catch the first time we spoke, can you just give a brief introduction to yourself and background?
Good, for sure. So I'm an accountant by profession, right? I have a financial services background. And over the last year, I've been focusing on the blockchain area.
Great. And Chris, correct me if I'm wrong. You're VFA agent qualified, right?
Indeed, yes.
Great. Okay, that's good to specify. All right. For those of you listening, I want to give a little extra shout out to my colleagues at our university course, and thank you also, Chris, for jumping on the line so quickly. As I literally pinged you last night, and here we are today having this chat.
My pleasure. Not a problem.
So thank you from me, and thank you on behalf of them. During our lecture, we're discussing regulations at the moment, and one of the questions that kind of came up was, where's Malta from the accounting position? And when I say accounting, I'm not specifying tax per se, but how Malta expects, I guess, crypto-centric companies to deal with their accounting if they're using cryptocurrencies. And I know you've been lecturing about this in Malta as well, so I'm going to just leave it on to you.
Very good. So I think we should start with the fact that Malta doesn't have national laws which govern how companies should account for any assets. Actually, there's one simple provision, if you like, which says that Maltese companies have to abide by an IAS, International Accounting Standards.
Great.
So we actually have to look at whether the IASB has come up with guidelines or standards, and the answer is no.
Okay.
So we're basically in a situation where we have to guess on what is the right way how to account for the crypto assets without having any proper guidelines or proper rules for them.
Okay.
So I think there have been certain positions which have been taken by the big four firms. They're not exactly in line between each other, but they're very close. And there are also, besides the positions taken by the big four firms, positions which the AASB has taken, which is the Australian Standard Setting Board, and the Japanese Standard Setting Board, the ASBJ,
Great.
which basically took a shot at how one should account for crypto assets. They didn't cover all types of tokens, but they did give it their best.
Okay.
Interestingly, in Japan, one of the accounting standards that you can choose is IASs, but there are other ways, other standards you can implement in Japan. Whereas in Australia you can actually, I believe you should be applying IASs.
Okay.
I'm sorry about that.
Okay.
So the way I would, and so in Malta we end up in a situation where people have to make a decision on the right way how to account for crypto assets by using their common sense.
Okay.
So before delving into the accounting, I think we should have just some background. So
Great.
accountants think about recognition and measurement usually.
Sure.
So next to planes right now, right? So when you enter into a finance lease to buy a plane, is it a plane that you should be putting on your balance sheet or a lease? And that is recognition,
Okay.
right? The measurement is it at cost or at fair value in very simple terms?
Okay.
And we have to apply the same approach in accounting for crypto assets. Now, as you know, there isn't one type of crypto assets. There are more than one type.
Sure.
And to my mind, there are four main categories. There is the payment token, right? The coin that you usually usually use to make payments, like Bitcoin and other similar coins. Then there are the utility tokens, right?
Mm-hmm.
Like Ether. Then there is a security token, which basically is a share or a bond, but
Sure.
in the form of a token on the blockchain.
Sure.
And the fourth type of token is the asset-backed token, right? That's the token which basically has a claim on an asset when the asset is tokenized. So,
Sure.
for example, there's Bitcar, right, which basically allows you to get exposure to a vintage car which you like.
Sure.
And each four categories have different are almost completely different in nature. So the accounting should also change accordingly. Good. So let's start with the payment token, right? So there's a test which you ought to go through. It's not an official test, but it boils down to a test of 4 steps, right? The first question you ask yourself, Bitcoin. So let's use Bitcoin as an example, right? Is it a currency?
Mm-hmm.
Because if it is, you have to look at IAS 7, all right? And the AASB and the ASBJ have their interpretation is that it's not a currency.
Sure.
And their assumption is because Bitcoin is not issued by a central bank,
sure.
then it is not a currency, which
Sure.
I disagree with that, to be honest.
Okay.
Before the Fed was created in the 1900s, US banks used to accept gold and issue paper note, right?
Sure.
So we had a situation where many banks in the US used to issue different paper, and that paper, to my mind, is currency. If that is not currency, tell me what is currency, right?
I think this discussion, Chris, is going to be a big a couple of bottles of wine and you and me at a weekend, because I have very, very different views on how to define and especially when it comes to central bank digital currency. You're touching on some really, really important points here. So thanks for elaborating on your personal position. It's always exciting to hear people just come out and say, you know what, Bitcoin is a currency, because not many people take that stance in the academic world, at least.
Very good. Okay, so back to our point, right? So I was saying that the assumption that it's not a currency because it's not issued by a central bank is incorrect. Having said that, I think I tend to agree with the conclusion of the AASB and the ASBJ. Because one of the requirements to have a currency is that currency has to be a unit of account.
Sure. Okay.
Now, in most currencies, the value is so volatile that it's impossible to think in terms of Bitcoin or in terms of Litecoin.
Exactly.
The value is so dramatic. I can't think, this house costs 100 Bitcoin.
I always refer to the pizza, right? The classic pizza.
Exactly.
Like, how would you put a value on that today? It's like compared to then, like it's insane. Like the most expensive pizza in the world.
You're right. So I think that you shouldn't treat it as cash. So the next step then that you should ask is it inventory? And I don't think you accept Bitcoin because you want to resell it. You accept Bitcoin as a means of payment. And therefore, you can't treat it as inventory. You're not in the business of buying and selling Bitcoin, except if you are an exchange or you're speculating in Bitcoin. All right?
Okay.
In that situation, I think you should treat it as inventory.
Okay.
And there is an exception in IAS2, which allows you to measure it at fair value.
Okay, so unless you're an exchange, you would not kind of qualify crypto as inventory in your balance sheet.
Yes, at a high level,
Okay.
either an exchange, right, or
Yeah.
maybe you're trading in that
Sure,
currency,
sure,
maybe
sure.
you're speculating, but otherwise, I don't think
Sure.
you should treat it that way. Then the third step is it an intangible? And here the complication arises. So what's an intangible in terms of accounting?
Okay.
All right, intangibles are those assets which, as a business, give you an edge over your other competitors. This is the Chris version, the simplified version of what IAS 38 says.
That's fine. It's good. You're saving us from reading like hundreds and hundreds of pages. Summarize all you like. Just stipulate when it's opinion, so we don't get confused.
Oh, very good. So basically, if you look at the examples that IAS 38 come up with, they come up with brands, for example, right? They come up with goodwill. They come up with export quotas. These are all advantages which you have over your competitors. Apple won't be the company it is now without the name Apple on its products, right?
Sure.
So it is that thing which really which helps it be apart from the rest. So the question is, should I treat Bitcoin as an intangible? I don't think so, right? Because if you have to really understand the spirit of the IAS 38, it would say, I would come to the conclusion that Bitcoin gives me no additional benefit, no additional edge over my competition. Having said that, I think some audit firms have come up with the conclusion that in the case of a currency, in the case of Bitcoin, you should treat it as an intangible.
Okay.
I kind of don't blame them for that, because, to be honest, there is no other better alternative. But I still think it's like you're forcing something square into a circle.
Sure.
So, if I'm not mistaken, the AASB, the Australian Standard Setting Board, disagrees with using intangible as a classification, and suggests that a new category has to be created. But of course, we have to wait for the IASB to come up with that new category.
Sure. Okay.
Right. So the conclusion is, if you have Bitcoin or other similar currencies, probably you should treat it as an intangible. Otherwise, you have no other option.
Gotcha.
Even though it feels like it's wrong, right? Deep down, it's wrong. You have to do with what you have.
Okay. All right.
That's the first type of coin, right?
Yeah.
And now let's move to the second type of coin. And here it becomes even more complicated. So, a utility token, right? What's a utility token? Last time in our podcast, I gave the example of a gaming arcade, right?
Yeah.
You can't play billiard at the gaming arcade if you don't exchange your fiat into tokens.
Sure.
You can't play poker at the casino if you don't exchange your fiat into chips.
Sure.
So that's that currency which is allowed in that certain ecosystem. It doesn't give you any right to the cash flows of the casino. It doesn't give you any claim on anything. It just lets you participate in an ecosystem.
Exactly.
So let's go again through the steps that I went through for Bitcoin and other payment coins, right? So the first question is it cash? I don't think it is cash, right? If Bitcoin isn't cash, utility tokens can't be cash either. Okay. Second question is it a utility token? Sorry, is it IS2? Is it inventory? And as long as you're not an exchange or speculating in that utility token, I don't think you can treat it as such.
Okay.
Well, the third question is it an intangible? And here again, I don't think there is consensus. Some audit firms seem to have taken the approach that yes, it is an intangible, but deep down, I don't think it is an intangible. Say I've bought 10,000 euro worth of tokens, right, in Binance, all right, and I am in the furniture business. So when I said in Binance, I meant the Binance token, right?
Okay, BNB.
BNB, exactly. BNB. So if I am in the furniture industry and I don't really intend to use 10,000 worth of fees to exchange currencies, coins to fiat or whatever, right? So why should the Binance coin give me any value to me as a business? What edge does it bring to the business? If I am in the furniture business and I bought a token which probably helps me do my business better,
Sure.
then possibly I can say that my costs are lower, right?
Yeah.
And
maybe on an operational level. Yeah.
Exactly. And in accounting terms, we say that future economic benefits will flow into the enterprise. All right. So arguably, you could say that. However, I think in most cases, companies who are buying utility coins, tokens, haven't bought them to actually use them in their operations, as you referred, but to speculate.
Okay.
So the other option would be to say, listen, this could be a prepayment, right? Not an intangible, of paid for the service in the same way I would have prepaid to buy a product on Kickstarter.
Sure.
And to be honest, I much prefer this option.
Okay.
Having said that, I don't think that you can, and this brings us to the measurement part, right? So far we've been discussing recognition for utility tokens. So for the measurement part, I don't think ISS allows you to measure at fair value if you have a prepayment, right? If you've prepaid your rent, there is no mark-to-market problem here. But we're in a situation where probably a utility token which you bought before the platform goes live is more of a prepayment than an intangible, but you still would have to you still have to fair value that prepayment, even though IFRSs don't really consider that prepayment. So we're not really, again, we're also into darkness, and you just have to use a judgment. You have to make your judgment to make a good decision on how you should categorize and fair value and measure your utility token.
Okay.
We can move to the third type of token, right? The security token.
Okay.
And the security token should be simple, right?
Because I think it's the easiest one, to be honest.
Yes, hang on. So,
clearly I'm wrong. I mean, I find it the easiest one to understand, at least. But anyway.
Fair enough. Very easy to understand, right? Because you're buying a share, not in the form of a share on an exchange, on a normal exchange that we know of, like the New York Stock Exchange, but it's a share which is in the form of a coin or a token on the blockchain.
Okay.
And so far, so good, right? So basically, IAS 32 says if it's a financial instrument, and a financial instrument is defined that if an event creates an asset and a liability, all right, that means that the investor has acquired an asset by buying a share, and the issuer has undertaken a liability by issuing a bond or issuing equity, not really liability, right? But it has basically assumed a commitment to share profits.
Okay.
So there's a liability, if you like, on one side, and an asset on the other side.
Okay.
So can you hear me? There's some background noise.
Yeah, as long as they're not calling your flight, we're good. Because then we'd be liable for you missing your flight.
No, as if I have some time left on my. So basically, I was saying, right? So usually it's quite easy when you issue a security, then it's a financial instrument, and you should treat it as if you've bought a financial instrument if you're the investor, and you should treat it as a financial instrument if you have issued it as a company. The complication arises because right now we don't really have equities, and I don't think we have the normal simple bonds on the blockchain. What we have are these STOs, right? And what's an STO? Because utility tokens, because the issue of utility tokens now is very weak, and many investors have lost their shirt by investing in utility tokens. Issuers are now adding some more sugar to the pill, right? So they're saying, all right, you have access to the platform if you have this token. And also, you will have a share of the revenue. So 20% of the revenues will be shared with the token holders, or
Okay.
20% of the profit, what
Sure,
have you.
sure. Whatever the terms define that to that opportunity.
Depending on the white paper and depending on the prospectus. That, however, basically makes it a hybrid, right? So maybe your listeners would know what Tesla did a few years ago. Tesla issued a bond which is convertible into equity. So the holder of the bond has the option to convert it into equity. And that basically is the issuing of two securities into one. There's an embedded derivative in the bond. And to value that bond, you need to understand to determine the value of each component and account for it separately.
Okay.
Now tell me, how can you, and now I'm moving to the measurement part, right? So how can you determine the value of an STO, of a security token, apologies, when you don't even know what the cash flows of that token are going to be? Harder, right, to determine the value of the utility token if there's no market for that token per se. What there is a market for two tokens into one.
Sure.
So it's relatively easy to determine the recognition aspect, but I think it's quite hard to determine the valuation.
Well, this has been one of my kind of qualms, I guess, ever since I've been in the space, coming from the venture capital side of things, where we're used to seeing, like a sensible valuation based on some kind of attribution within whatever the offering is. And then all of a sudden moving into the crypto space, reading a white paper, seeing valuations and thinking, based on what? So I think the valuation is a very, very good point
Sure.
in this discussion as well. When be it ICO, be it STO, I think just in the general context of the the blockchain ecosystem, I think valuation is truly one that stands out as one that bothers me, to be honest.
Agreed. I so much agree with you.
Good, we agree on something. Okay, cool.
So conclude, right? So not to miss my flight. The last category is the asset-backed tokens, right? So here I think it's quite simple, because there should be, to my mind, no difference between buying a whole vintage car or a part of a vintage car. There shouldn't be a difference between buying a whole apartment. And if I buy half an apartment with you, so
Okay.
we buy an apartment together, you and
Sure.
me, Carla, and I have half and you have half.
Yeah.
To my mind, the accounting treatment, the recognition, and also the measurement is the same.
Okay.
So if it's an apartment, I should report it as PPE or as an investment property if we plan to rent it out.
Sure.
And that's it. And if the value of the apartment is 100,000 euros, and I've bought half of it, then 50k is my share, and I put it on my balance sheet.
Sure.
I think that is the easiest accounting of all the four types of tokens.
Good. Nice. A few just like sporadic questions for you, Chris, and you tell me if you need to go. So have you seen any creative accounting in the space so far?
Not really. None at all, actually.
Okay, so you think that like the from an accountancy perspective, most things are being treated in the, let's call them, traditional sense then, and then applying where necessary. Is that the perspective you're seeing right now?
I think what I've seen so far is accounting which tries to make sense out of the confusion that there is right now, because there aren't accounting standards.
Sure.
But I wouldn't call it creative accounting. I haven't seen accounting which tries to take advantage or abuse of the fact that there is no information or no certainty right now.
Good.
Of course, there could be other situations where there is actually.
Of course.
And I wouldn't know.
Of course. In terms of Malta, then, just to clarify, at present, we do not have any standardization, guidelines, or any type of advice being issued from regulator or foundations on the island around how to treat cryptos within corporate governance.
Not that I know of.
Not
I
that you
know
know.
that I believe that the MIA has a subgroup, I believe,
Mhm.
which is working or to find a way at least to come up with a guideline, because
Sure.
we have many crypto businesses in Malta.
Yeah.
And besides that, there are the big four audit firms which came up with their interpretation,
Sure.
which I think, if you follow at least one of them, you shouldn't be very far away from the truth.
Good. And my last question, Chris. Last time when we spoke about VAT, and I think that was pretty clear. And my last question would therefore be about tax. Has anything changed with the tax position with Malta with regards to crypto?
So that's good, yes, because on the 1st of November, when the laws came into effect, the CFR, the Commissioner for Revenue, came up with guidelines on what are the VAT implications, the income tax implications, and I also believe stamp duty implications on the issue of tokens, on the sale of tokens.
Wonderful.
So that's good.
Good.
And of course, we could have done that as a country, because we don't have to depend on any other jurisdiction or any other board to come up with these guidelines.
Awesome.
Tax law is a matter of
national, yeah. And we
at
talked
national
about that last time.
So we could come up with that approach.
Awesome. Is that easily found online, Chris?
Yes, I believe if you go on the CFR website, cfr.gov.mt, you should find the guidelines there.
Wonderful.
Or we can have a podcast next time about it.
Yeah, you can come to the studio instead of you having to practically have your arm fall off while you're talking to me in an airport, and I can at least give you a coffee. Chris, thank you so much for doing this on such short notice. If any of my fellow student colleagues or anybody listening to this podcast on YouTube have questions for you, where should they find you?
For sure. So they can find me on LinkedIn, right? Chris Gregg, probably they'll find me by comparing the face and they'll get to me. Or they can email me on chris.gregg@white.mt.
Wonderful. Wonderful.
chris.gregg@white. White, the color white. White.mt.
Wonderful. And I'll just reiterate your name and that in some kind of non-bot, non-anti-bot friendly kind of way at the bottom of this cast. All right, Chris, thank you so much. Thank you everyone for listening. If you have any questions, please do hit us up. And we'll see you very soon.